The latest trend graphics reports are in for the city of South San Francisco, and in today's video, I'm going to be doing a live reaction as we go through the data together coming up on this Bay Area Housing Market Minute. The Silicon Valley and Bay Area housing market are on fire. That is not news. And in today's video, I'm going to be doing a live analysis to see if that narrative is changing in South San Francisco. But before we get into the data and the numbers, if you're a home buyer in today's marketplace and you're looking for a comprehensive data set to assist you with your home buying decision making, you can text the word data plus the neighborhood or the city or the zip code that you're searching in, and we'll send that data straight to your inbox. And if you're a home seller in today's marketplace and you're looking for a data set to help make the decision for you or help you make a decision as to whether or not this is the right time to sell or what should you price your property at, all of those questions will be answered when you text the word data plus your property address to the number down below, and we'll get all that information sent straight to your inbox. All right, so let's dive into this data set. I'm excited. I really am. South San Francisco is definitely one of, because it teeters on the border of the San Mateo County and San Francisco County. We have this eclectic mix because if you've been watching my videos, you've been paying attention for any period of time, you'll know that San Francisco, I mean, it is not in the best situation right now, but South San Francisco is far enough removed to where it's interesting to see because you get kind of like a blended experience, if you will. And so interesting. Gotcha. So it looks like we lost about 33% of the demand overnight or in 1 month. We went from 31 pending sales. And again, these numbers are so small that, even 8 sales, is pretty much 30% of the overall pending sales. So we went down about 30 percentage points on pending sales, and inventory levels came up. So what you're seeing right now is the light green lines represent the active inventory. So the amount of homes that are on the market right now. The dark green lines are the sold homes, and then the pending sales are represented by the red line. So to see the pending sales and the inventory levels move closer together is not surprising given the time of year. If you've been watching other videos, you'll know that the pending sales typically drop off in the summer months and inventory levels tend to rise a little bit during the summer months. And so this is not surprising necessarily, but it is crazy to think that just a month ago in July, we had double the amount of homes pending than we did active on the market. And now basically we're at the same. So South San Francisco has not enough units to where you don't you can have a drastic kind of change in the marketplace rather quickly. Now, it'll be interesting to see how this plays out in the fall. And that's why you continue to tune into the Bay Area Housing Market Minute so that you can get up-to-date stats on not just South San Francisco, but the entire Bay Area. Very interesting to see this. This is, I wouldn't say it's surprising, but it's definitely interesting in the sense that I wasn't expecting to see something as dramatic as that. So it is interesting for sure. Now, that being said, in August, we still had 108 sales price to list price ratio. Now, keep in mind that sales price to list price ratio is a lagging metric. Let's see how that plays out in the following month. So in September, why is it a lag metric? Well, it requires the sales price. So all those pending sales pending sales dropping off, those pending sales will reflect in the next month, which will be September. So in October's data set, we'll see what that merging of inventory and pending sales, what bringing those two together is going to do to the sales price to list price ratio. But look, oh my gosh, in no time over the last 15 months has the sales price to list price ratio in South San Francisco been less than 100%. So a couple things here, just to analyze that a little bit further. We've had pending sales outpacing inventory for nearly the entire time with very few exceptions. I'm looking at this in December, we had just a 1 or 2 homes less pending. So essentially, we've had a very strong seller's market for the last 15 months, even so much that in August of this year, 14 days average on market, which is nothing. In most parts of the country, we're lucky if we get 60 to 90 days. So this is fascinating because the numbers would lead me to believe that these numbers wouldn't be so skewed in sellers' favor, which I believe goes to show that, by the way, the absorption rate, meaning pending sales relative or closed sales relative to the amount of active inventory, the pending sale absorption rate is at 100%. Anything above a 33% is a seller's market. So the fact that we're even talking about like this being, oh, like, wow, this is crazy. This is like meaning, oh, wow, this is crazy. Like, could this be the end? Could this be doomsday for South San Francisco? No way. No way that an economist would never support that kind of interpretation, because we're still well above and beyond what the traditional 33% absorption rate definition of a seller's market. So we're still doing exceptionally well in South San Francisco. But it is interesting to see how, even though we have had a few months where we've had those lines, the pending sales and inventory levels intersect, we still had white hot market the entire time in terms of sales price to list price. Very interesting to know. Could also be indicative of what the typical agent does in South San Francisco, which is underpriced. So that could be partially due to that. But 15 months of sales price to list price ratio being well above 100% means that you've got a lot of built-in equity into the marketplace now, because one sale posts and then the next sale posts and then the next sale posts, and then they're going to list it right where this sale posted, not where this one posted. So that's a lot of growth in 15 months. Last thing I want to look at here is the absorption rate. So you can see there's a huge spike in absorption rate in the spring months, not uncommon. In the summer months, we're used to seeing a slight slowdown. So the fact that we're still well above 100% absorption rate should be music to any home seller's ear. And I would expect, based on the data that we're seeing right now, pending data, I would expect that this could reach 100% or maybe even a little bit below. We'll have to see how many of those pending sales fall out of contract. But this is fascinating. This is really fascinating. So again, South San Francisco, it's a blended experience. Sometimes you get people that are looking in South San Francisco and they're like, you know what, screw it. I'm just going to go to the city because right now South San Francisco is too hot. I think that could partially be what happened in August of this year, where we saw such a drop off in demand, is that it was getting too hot. And we had some buyers just say, hey, San Francisco is literally the next city, and I could avoid most of this competition because San Francisco's not a competitive market right now for the most part. And that's very common, because migration, the migration trickle down effect that I've spoken at length about in previous videos, it could be happening here. So it'll be interesting to see how all of this plays out, but that's exactly why you tune in to the Bay Area Housing Market Minute. Stay up to date with everything, all things Bay Area housing market related. This is Danny Gould, everyone, selling Silicon Valley, and I will catch all of you in the next video.